Hey there, future millionaires. Welcome to the Profit. Today we're going to cover the basics of shorting or making money while the market falls. We'll also go over what margin is and what it does, and times you may want to use it. The number one thing a trader wants in any market is volatility. Large moves, either up or down, it doesn't matter which direction. You're looking for a trend you can ride and hop off, just like surfing a wave. A couple of terms. Longing or going long is the act of buying and expecting an asset to increase in value where you'll sell at a profit. Shorting is the opposite. It's the act of selling and expecting an asset to decrease in value where you will buy back at a profit. So traders can make the same amount of money whether price is rising or falling as long as they are on the correct side of the trend. Let me give you a quick example of how a short works. Let's say you have one Bitcoin in your wallet and you feel like the market is about to tank. And if that happens, you'd like to make some money. One quick note, not all exchanges allow you to short or trade on margin, but there are plenty that do. The mechanics of a short are this. You'll use one Bitcoin in your account as collateral to borrow one Bitcoin from the exchange. Let's say the current Bitcoin price is $50,000. You borrow the one Bitcoin and sell it right away for the $50,000. The exchange handles these mechanics for you when you enter the short. Then you just wait for the price to drop. Let's say your profit skills were spot on and the price drops to $40,000. At that point you're happy and you buy the one Bitcoin for $40,000, which you then return to the exchange to pay back the one you borrowed. In the process, you have then made $10,000. That's the difference of the $50,000 you borrowed on collateral to start with and the $40,000 you bought back for. Of course, things can also go the opposite way. Maybe you borrow at $50,000 and the price rockets up to $60,000. You might be forced to buy back at that higher price in order to repay. So in this example, you'll lose $10,000 instead of gaining $10,000. Now let's talk about margin or leverage trading. But first, if you like this channel and the content, and we're just getting started, please like, subscribe below, and pass it along. We appreciate it. Now, margin or leverage trading is the act of multiplying your investment amount. Basically, this shifts everything into hyperdrive. Based on the amount you have on the exchange, you'll be able to make your $1,000 trade like $2,000 using 2 times margin, or $10,000 using 10 times margin. So every dollar that your asset moves in a leverage trade, it'll represent 2 times, 10 times, or even 100 times whatever amount you entered the trade at. Here's a quick example. Using my profit skills again, I see the market is about ready to explode upwards. I decide to trade my $1,000 on a 10 times leverage trade on my favorite exchange. So if the price goes up $100 from my entry, that is really $1,000 for me as I am long 10 times. Every dollar of mine equals 10. If the price goes up $200, I have now doubled my investment as I am up $2,000. So you can see how your account can move quickly based on smaller moves in the market. Again, the trade can always go against you. In that same example, if the price drops $200 quickly, then you're down $2,000, twice your original investment. It can add up incredibly fast. I can also short the market on margin using the same example as above, but now you are making money when the market drops and losing if it rises. It's just a bet on the other side of the coin. Margin trading is not advisable for beginner or intermediate trading. Things happen so quickly and you have to have an experienced and disciplined approach. But just like the lottery, someone always gets lucky and gets on the right side of a highly leveraged trade. But again, just like the lottery, most people lose money, lots of it. So stay away until you feel very comfortable in that area, if ever. Okay, that's a wrap. Thanks for watching. This is the Profit, signing off.